DailyFX Video BYOA contest, June 26th to February 1st, 2011. My name is David, and the video I'll be submitting today is for the Euro USD. Real quickly, I just want to tell you what I'll be talking about here, some technical points, some fundamental drivers, and ultimately my outlook for next week. So, starting with the trend line, from a technical standpoint, we just got a trend line break of the Euro USD. Got a break of that last Thursday. So dating back to January 10th, all the way up until last Friday, finally got a break of that. That's definitely going to expose us to some more downside. That downside, as you can see here, is kind of capped a little bit here, down at 140. But ultimately, that does open us for another 250 pips downward. Okay, so that's a nice opening there to take advantage of. Talking about the simple moving averages really quickly. As you can see here on my charts, I've got the 10, which is this dark red, blue's the 20, green's 50, orange down here is the 100, and way down here at the bottom is 200, which is the red one. Okay. We got a realignment of the three immediate short-term to immediate trend moving averages. So the 10, 20, and 50 are all aligned downward now. As you can see here, the 20 moved in underneath the 50, 50 is the top, and 10 is the most immediate one. That is telling us from the short-term to immediate standpoint, everything's pointing down. We are only being capped right now by the 100. So as you can see, we've got a realignment of that. Also, talking about Fibonacci lines here, and kind of a wave indicator I use here. As you can see here, starting down here would be considered a wave 1. We've got a wave 1 up, got a retracement of that downward, and then ultimately a long third wave here. Now, anytime I've got a long third wave and then ultimately two smaller waves inside, I like to draw a Fibonacci line on the outside. And I've noticed that it actually, price action in between this long wave really follows the Fibonacci quite well. So as you can see here, we drew a line starting all the way back here, all the way to the top up here, at 150-ish, 149. And as you can see here, price came down, hit the 38.2 level perfect, bounced back up. We broke above the 61.8, but ultimately fell back down. Again, we respected the 50% line, back up again, kind of hanged out around the 61.8, and now we're back down to the 50. So as you can see here, prices are respecting that Fibonacci line quite well. And then lastly, I want to talk about a custom indicator that I have. Been using this custom indicator for a while now. I really like it quite a bit. This is a USD strength index. It's an indicator, not the actual index itself that measures the dollar strength. But what it does basically is it measures the movement of the USD versus 7 major currencies. So that'd be the euro, the franc, sterling, Kiwi, Aussie, Looney, that kind of thing. Okay? So here's the daily picture of it. Now it's inverted. Okay, so as you can see, the higher it is, the weaker the dollar. The lower it is, the stronger the dollar. So I've got a couple trend lines here. As you can see, trend really accelerated downward quickly, so we had to redraw some of those lines. But as you can see here, we're definitely breaking down here towards the bottom. This bottom right here correlates with the 140 level. Okay, so that's from a daily standpoint. From a weekly standpoint, we were kind of here at pretty much all-time highs in April, end of April, and that dates back to kind of August, September of 2010. Basically, price action is exactly following the way it was going back in 2010. Okay, so we got a spike upward, we broke back down, came back up again, tested these key resistance levels here, or we call them support lines. Again, broke through this key level right here, which was supporting us for quite a while, supporting us all the way back until March. And really, there's not much stopping us all the way until the 0.0 level here, which would indicate, quite a strong dollar. So I am paying attention to that quite a bit. So that's about it from a technical standpoint. Everything pointing downward, that is. Fundamental drivers really quickly. I just want to talk about the QE2. Obviously, QE2 is ending June 30th, so that's going to pretty much be good for the dollar, obviously, because money's going to be coming out of the equity markets. Money's coming out of the equity markets. It's seeking some sort of safe haven, and the dollar is certainly one of those areas to put money. U.S. involvement in oil, adding reserves to the market's obviously going to push prices down, and this can't be good for energy companies ultimately, because there's a lot of energy companies on the S&P, and the lower the oil, it's going to cut into the profit margin for alternative energy companies. That's going to hurt them, okay, because they kind of rely on higher prices, oil. And then ultimately, the final line is that the S&P and Dow should be heading down, and obviously there is a correlation between the S&P and Dow, and also with the euro, and then also the U.S. oil and euro. Okay, there's all correlations between all of those. Okay, so everything from a fundamental aspect is going down, and then ultimately, probably the most important thing I want to mention here is contagion in the euro. I think the Greece situation is just basically baked into the cake, meaning I think price action already reflects what is going on in Greece. And ultimately, I think the primary driver now is going to be contagion. I think the worry is now going to shift from Greece over to Italy, over to Ireland, and we're going to have obviously major concerns about contagion. And obviously, from a standpoint of the ECB and IMF, I mean, it's absolutely impossible, in my opinion, that they would let Greece fail. So I think they'll do just enough to patch up the issue, and that's about it. And then from a outlook standpoint, what I'm looking for next week, I'm looking for a push higher before I get in. So I'll show you here what I'm looking for. I'm looking for a push higher here to 3 different levels. I'm going to use kind of a laddered entry system to short here. So I'm looking for my first level here at 143, second level here at 143.5, and then ultimately 144. I'm looking for short positions, and my targets are obviously going to be down here towards 140. I'm looking for a retest of that. I don't expect a break of that 140 line next week. Simply because we've got a holiday weekend coming up, volume could really kind of just fall off the edge, and we don't really get much of a drive past this level. But I do certainly think we'll get a retest of it and a little bounce back upward, and then ultimately probably break that level going forward. So that's your video for the week. Thank you for watching, and good luck trading next week.